Welcome back to the Crypto Trends Podcast, where we cover all things cryptocurrency, blockchain, Web 3.0, and AI. I'm Robert Croak, and I'm joined by my co-host, Armando Pantoja. Both of us and our amazing team are excited to bring you the best information, guidance, and strategies each and every Wednesday. So follow along and always remember to take notes and take action, especially right now because the markets are wonky, everyone's in panic mode, and we just need to just chill out. When in doubt, zoom out, and everyone understand these things happen in every bull market and leading up to every bull market. So let's get into talking point number one. The new EU crypto law could make or break digital asset futures and could be the cause of a greater pullback. So I want to dig into this a little bit. In the European Union, the MiCA, Markets in Crypto Assets Regulation, is nearing its enforcement deadline, which is coming right up on June 30th. This framework aims to offer a comprehensive regulatory environment for cryptocurrencies and will significantly influence everything from stablecoin operations to investor protections. And this really is a pivotal moment that could either spur greater confidence in crypto across Europe or introduce new challenges for compliance and operations within the industry. In my opinion, that is definitely what is weighing on the markets, and that's why we always say you have to look at the total markets and not just the U.S. markets. This is so important, everyone, because a lot of people that we talk to in our DMs, on our lives, they're looking at just what's in front of their faces, and we have to look at the bigger picture. It's a big, big world out there, and this type of situation, like what's happening in the EU right now, could make or break where we go from a global perspective and how prices change in the crypto markets.
And yeah, that's why it's important to stay on top of the industry with, podcasts like us, following our own personal pages. And even greater than that, going online, reading about it. We read about crypto every day. We believe education and being informed is very important in how you perceive markets, right? Because the regulation that we're talking about is the MiCA regulation. And this is kind of like a double-edged sword, right? It's going to increase transparency and scalability. So that's why it's important to stay on top of trends, be educated, and be informed, right? And that's why it's important to listen to the Crypto Trends podcast, listen to our own personal pages, and also listen to things that are outside of that as well. Now, the MiCA, is it the MiCA?
You can just say MiCA. Yeah.
Now, MiCA this kind of regulation is kind of like a double-edged sword, right? Let me say it again. This regulation is kind of like a double-edged sword, right? It's going to increase transparency and scalability, but also increases uncertainty because the market doesn't know how to perceive it because they're unclear on how far or how not far it's going to go. Now, whenever there's uncertainty in markets, it always creates panic, and the price tends to reflect it. It either stays stagnant or it drops. But the good news is that people that are well informed can take advantage of that, right? If we look at the regulations, like with the Ethereum ETF, we had a 70%, 80% chance of it being approved in May. Now, it wasn't certain, but it was almost certain. Mm-hmm. So you can prepare for that because you understand the market. Now, if you understand what MiCA is, you understand the market over there, you understand the politics, you can make an informed decision and be mostly right. So if you do that in investing, that's how you make great gains. With MiCA, we can see that market may be uncertain, but we can see that either they're going to go this far or that far, they're going to make this regulatory change, and they're not going to make it, and we can make informed investment decisions based on that. So like I said, is that it's a two-edged sword. It's increasing uncertainty, but it's also going to increase transparency and scalability.
Well, we've already seen, let me touch on some other things first, but we've already seen the U.S. market bend and lean towards more positive outcomes for crypto. We've seen it recently in Asia, which is huge. That is a giant market and very good. And so now seeing it in the EU, I expect a positive outcome for this. Mm-hmm. But we just felt, and I'm glad we're touching on it, that this is so important because people come to us every day and say, why is the market crashing? Why is the market crashing? And it's the same old sky is falling mentality. without doing their research. And when you look at the ultimate impact of MiCA, it will depend on its final structure and the readiness of crypto businesses to adapt to these new rules. And it's an essential watch point for everyone in the crypto space to understand that these regulations in the EU can affect us and the overall prices in the markets. And that's why it's so important for everyone just to understand that it's a big world out there, and we have to pay attention to the news cycles everywhere, not just in the U.S. and not just what we see on Coinbase or Crypto Market Cap or whatever. So important.
And to be honest, worldwide, we need a set in stone regulatory framework, right? And that's coming. I like to see the progress we've made worldwide in that, because in order for crypto to get where it's going to be, and integrating financial networks and systems all over the world, we need a set in stone regulatory framework, because that uncertainty is actually kind of slowing down the progress. But the good news is that we're moving towards that. So I like to see these types of things all over the world.
I agree with you. And I do think we will see more and more of that, because we've said it all along, and it's just been really rough in the United States, that if they just set it in stone and gave all these companies the framework, we wouldn't have all of this.
Exactly.
And we wouldn't have all of this volatility. You don't see this much volatility in the S&P 500 or the NASDAQ, because they know the rules and they follow the rules. And that's what we need in cryptocurrency. So let's move to the next point. Is crypto market volatility indicating major transformations? I like this point because if you look at crypto market price movements, they reflect a broader economic indicator and the new developments that are happening. And so staying updated on these shifts is crucial due to the market's susceptibility to global news and regulatory changes. It's so important for everyone to keep up with what's happening. And it really means everything for people to stay educated and alert is so essential in navigating the volatility in the crypto markets. And that's why we're always preaching to everyone that listens, when in doubt, zoom out. This is such an important thing that we say a lot, because everyone wishes, including Armando and I, that the markets just went up and to the right and it was all easy, but then everyone would be rich. And it's just not that simple. And that's why we have to always be learning and always be adjusting our thesis based on what's presented to us. So Armando, walk us through a little bit about where you see Bitcoin going right now and what is happening in the Bitcoin market essentially.
Now, what we see with our analysts and what me and you have been watching in the Bitcoin, along with the technicals and what's happening around the world, is Bitcoin's highly likely to have a rapid rise to 88,000. And the reason why, one of the biggest reasons, is that right now on the Bitcoin chart, technical chart, we're seeing an ascending triangle. Right, and what an ascending triangle is, it's almost like it's a triangle, right? It's a regular triangle, but the end is tilted upwards. So what that means is that the lows are getting lower and the highs are getting. The lows are getting higher and the highs are getting lower, and that converges into a tipping point. And normally when we see this pattern in the charts, that shows that it is either a breakout to the upside, either imminent or highly likely, right? And there's almost an 85, 86% chance that's going to happen. So I think Bitcoin is going to break up to, 86, 88,000 here quickly. The pattern suggests that, and I think it's going to happen too. And I think it's well overdue post-halving. And also with the post-halving, the ETF approval, the Ethereum ETF approval, and the reemergence of the retail investors coming into the market. I think all three of those things are going to converge, and we're going to see a lot of upward movement in Bitcoin here soon.
So if this scenario were to pan out, in your opinion, and I'm not going to hold you to it because right now it's really tough to make any predictions. What's the timeline? Where do you see this breakout? Because we could see it in a week, 2 weeks, 3 months. It's really hard to say, because if you look at post-halving, generally we start to see really bullish movement in, 4 to 5 months after the halving. And I believe right now, what are we, about a month and a half after the halving?
5, 6 weeks.
So where do you see it going? Because when you look at these critical indicators and, look at price movement, It's all over the board right now. We started to see some really good movement the other day, and things were starting to break out. Then it jumped right back down. So do you have any quick thoughts for the listeners as far as where you think a timeline is, or do you think it's still in that 4 to 5 months after the halving we'll start to see some breakout?
Yeah, we're 6 weeks in, so this prediction of 86, 88,000 could happen in 2 months, 3 months. It's very hard to predict what's going to happen. But the last breakout we saw, it hit the top of the triangle. Then it bounced back down to the bottom of the triangle. So the lows got higher and the highs got lower. So we're seeing the movement that we're supposed to see. But again, it's very difficult to say what's going to happen over a month, 2 months. I don't know. If you go farther out in the year, you go farther out the middle of 2025, it's easier to make those predictions. But right now, it is kind of choppy and difficult.
Yeah, for me, I just feel like it's business as usual. So I try not to really focus on the day-to-day. People get so mad at me in my lives because they'll be like, what do you think the price of ICP or Immutable X is going to do in the next 30 days? I'm like, I don't even know what the price is today. And that's one of the things. We're not laughing at you, the audience. We just want everyone to understand we're not here looking at the price of something day to day. I may glance at it once or twice a week to see what the markets are doing overall, but we're looking at it from a macro long-term outlook of what we think each narrative is going to do. We've been very strong on AI and gaming and decentralized science and all of those. For us, it's more long-term. We're looking at things more of a year to 5 year plan, not 1, 2, 3 week plan. And I think that's very important for everyone that follows along to understand.
I got a question for you. I wonder why people are like this with only crypto and stocks. Like if people had, like let's say for example, you go to your house and there was a big LED panel that told you what the value of your house was every day. Nobody would panic if it dropped 1,000, went up 1,000, dropped 10,000, went up 2,000, because they would understand that long term, the house is going to go up in value. But when people deal with stocks and crypto, their mind changes completely. I wonder what your thoughts are on that. Like, why do people do that?
Yeah, I think it's because for the same reason that people panic and have analysis paralysis when even getting into markets. I deal with it every day on one-on-one calls with educational people that I'm helping. And it really comes down to is that people fear the unknown, and so then they're always so afraid of losing money that they forget that they're losing money anyway by sitting on the sidelines due to inflation. And so if people could, and we joke about this all the time, if we could start a crypto account for people and help them invest it and then take away their access to the account so they can't see the price changes and they can't log in to make changes, they'd be better off because of the fact that they would let things take its course, and let, the profits go, the compound interest do its job. And one of the things that was really, really shocking for me is I had a client a couple of weeks ago, and he showed me his portfolio, and he goes, either I'm the laziest or the luckiest guy on earth. And what it was is his father told him at the IPO, right after the IPO, to buy $10,000 in Apple, $10,000 in Salesforce, $10,000 in Amazon, and $10,000 in Meta. And those like the Apple, the $10,000 in Apple is now worth like $388,000, and then the Amazon's worth like $1.2 million. So this guy became very wealthy off of $40,000 because he didn't sell, he didn't panic and try to get in and get out. So to answer your question, I think the number one biggest problem for people is overthinking it and then worrying about trying to time the market and getting in and out. And if people can avoid that, I haven't sold any Bitcoin since 2017. I don't think about selling it. I don't worry about it. Same thing with XRP. I sold tens and tens of thousands of XRP right before the court case got announced. Since then, I've been buying it back ever since, especially since the settlement. So I think people just need to be less active and they would do better and make more money.
It reminds me of something somebody told me. They said it was a broker at a major brokerage firm. I don't know if it's Vanguard or Raymond James. I don't remember. But he told me, he said, Armando, who do you think are the best performing portfolios that we own? I said, what, like billionaires? He said, no. I said, millionaires? He said, no. He said our best performing portfolios are people who have passed away or have lost access to their account.
Yep. It's the truth. Yeah. It's the truth. You know, my cousin, Tim, who runs Crow Capital, we had a conversation recently about one of my accounts. I literally haven't touched anything in that account for like 8 years, and it just grows and grows and grows. And that's the thing we have to get everyone to understand. Stop panicking. Stop making changes. Stop trying to time the market. I promise you can't. And just let things go and let the crypto market do its thing just like the stock market. So let's get into this next point, which I think really leads in from the last conversation, and that is institutional interest transforming crypto markets right now? So the market is observing a broad uptrend across major cryptocurrencies, and this is likely driven by increasing institutional interest. I mean, that's no secret. And while the shift introduces regulatory challenges, it also provides opportunities for new strategies and learning for traders, because that's the number one thing, is getting new people that are just getting started in cryptocurrency to understand what's going on and do their research.
Yeah, it's very interesting to see how institutions can sway market dynamics, right? Is that institutions have the ability to buy a lot at one time. They can change the market. They can cause prices to drop. They can force liquidations. They have a lot of power in all markets. It's not just crypto, stocks, real estate, whatever it may be. But as these large players start to enter the market, institutions, traditional companies, I've heard that a lot of traditional companies are secretly buying Bitcoin on other markets, and we'll talk about that later. But what the good news is that as more and more people, more and more money enters the market becomes more mature and less volatile, right? And that's where Bitcoin and crypto in general has to be in order to integrate into society the right way, like we think it's going to go. But like I said, is that I think that it's a positive thing that institutions are getting into this right now. I think the age of Bitcoin being just a Wild West type thing is almost over. And like we always say, is this was more than likely the last big super cycle Bitcoin ever had. That's why it's very important to take heed, like you say, take notes and pay attention and execute, because I'm telling you, I believe it too, and I'm basing my strategies on this, is that this is the last super cycle we're going to see. Institutions will own it from here on out. They're going to reduce the volatility, which is actually good for the overall market, but it's bad for people trying to get rich.
Yeah, because what everyone needs to understand, let's go back to your double-edged sword, and that is, once we have full regulation and everything is really, really dialed in, we're not going to see these huge returns anymore. It's going to turn into almost being just like the stock market, where for a few more years we're going to see outsized returns and some volatility, but it won't be how it's been for the last 10 years for us. And so that is why I believe, and I agree with you, that this market cycle, whenever this bull run happens over the next 18 months into and through 2025, it will change more lives financially than any other financial outcome of recent decades. And it's just so important for everyone to understand that. And so while this shift brings new challenges with regulatory scrutiny, it also opens up more and more opportunities for new and intermediate traders to learn from these trends and adapt your strategies to align with these evolving market conditions. And the cool part is right now is that educational resources are becoming more and more available to everyone, making it easier for new traders to understand the complexities of the crypto world and be able to act on them. And that's why, as anyone is getting more involved in cryptocurrency, they just really need to immerse themselves in podcasts like Crypto Trends Podcast. Get involved in Discord groups, start reading up more, and really just immerse yourself in the sector of cryptocurrency so you can fully understand the markets and be able to make really good investment decisions, because that's one of the keys. And also be careful of scams, because there's so many shillers out there that are getting paid to shill a coin. They don't even own it themselves. They don't care of the outcome because they're just trying to make their money pumping the coin. There's so many things to be careful of, and that's why I hope everyone that follows along with the Crypto Trends podcast is taking notes and really implementing these strategies and concepts that we talk about, because it's so important for them to understand the complexities of these markets so they can thrive in the markets like we are.
Well, I like your point about the scammers and all this stuff in crypto. Last week on Twitter, I kept posting about how I like XRP. So in my inbox, a dude said, if you don't stop talking about XRP, I'm going to dox you.
Okay.
And for people who don't know, what doxing means is that, for our viewers, is that they're going to reveal your public information. Mm-hmm. And he thought that was a threat to me. I mean, you could just look it up online, my address, everything you wanted to. But that shows us the issue in cryptocurrency. There's so many people who push projects, who own projects, that they hide behind a meme and a moniker. Yep. And you don't even know who they are. So to threaten to dox somebody is huge, because they're hiding, because they're running a scam. But this is prevalent in crypto. Yep. And that's why education is so important. Because once you get a certain level of education, you understand certain technical that doesn't happen to you anymore. Yep. And that's why a lot of these platforms like Robinhood, Moomoo, they're starting to provide educational courses, webinars, and things like that, because they understand how important education is to invest in the right way and actually making money. So like I said, is that it's very important. And like I said, the great way you can do it is through Crypto Trends, through our personal pages, but also YouTube's a resource. A lot of these things didn't even exist 10 years ago, and you guys have access to it. So it's really a great time to invest right now, because there's so much information that's been democratized and available.
Yeah. Yeah, for me, it's one of those things. I want to get one of those Vibe board TVs.
Yeah,
and then that way, when I'm live, I can just have my accounts showing so people can see my balances and what's in the accounts, because I don't have a reason to shill, and neither do you. And we work with companies, and that's great. I love it. But shilling is something that, shouldn't happen, and people should feel like shit. I want to do a TikTok just as a warning, as a public service announcement to people to stop falling for it, because there's just so many people out there that don't care of the outcome from their clickbait and their shilling, and that's really, really bad. So I guess furthermore, with more countries opting to regulate cryptocurrencies rather than ban them, this legal clarity will really encourage more investors and institutions to start exploring this asset class further. And it's already happening on a daily basis. We see some of the biggest hedge funds and investment funds and banks getting involved. And this really boosts the overall market confidence, and will definitely lead to more innovations in the space. And I just hope for the U.S. markets that the government going the direction they're going with supporting and finding ways to regulate rather than pushing companies out of the U.S. will happen quicker and get handled throughout the coming months, because this will be great to keep so much of the technology and the innovation in the U.S., which is, I think, very important.
When I first got into crypto, Bitcoin specifically in 2010, around 2010, 11, I got deep into the technical, like the technical development aspects of it, the geek part of it. And I didn't want regulation. I did not want the government involved. I would get mad at any kind of hint of that. But as I moved on and matured in my journey in cryptocurrency, I realized we need regulation, because for an average tech person like me, we don't need it. But the 90% of the population, they're afraid of doing anything without regulation. The government has to put their stamp of approval before people will even move into it. So by giving a set in stone regulatory framework that's clear, like you said, it's going to cause a lot of innovation to come into the space, a lot of investment to come into the space, and it's going to cause a lot of innovation to happen because of those two. And then people will also perceive it as less risky because the government has a silver stamp. That's all over the world. Every unique government that puts a stamp of approval on it, it will allow that country's people to invest in it without fear of losing their money. Or that's the reason why banks have the FDIC. Yep. It's because after the 29 crash, people were afraid of banks. Yep. And the only way they can secure the banks, they have to regulate the banks, and they have to provide some type of insurance. And now banks thrive. Yep. So things like that has to happen to an industry in order to push it ahead and increase innovation and trust in that industry. Now, what a lot of people don't know, it's a big thing that's been happening over the last week or so, is that there's rumors and reports that the institutions, banks, are buying Bitcoin at huge amounts. right, at up to 25,000 last week. And you got to remember, only 900 Bitcoins are created a day through the miners. So this is far bigger than the supply. And a lot of people say, why has it been reflected in the price? Well, it's because they're doing it OTC, over the counter. Mm-hmm. And this is a method that a lot of people use because they want to buy large amounts. They don't want to affect the price. Now, if I go into Gemini or I go into Coinbase and I buy 25,000 Bitcoins, the price is going to spike up 30%. Mm-hmm. Now, that means I would get the first Bitcoins at the price it is now, but the second will be higher. My average price will be well higher than what the price is now. But if I go OTC and I find somebody that just has a bunch of Bitcoin, like miners or whoever, I buy it directly from them, it doesn't show up in the exchange price. And also is that I bought a lot at a set price. Now, what does this mean? This means that eventually, based on supply and demand, it has to show up in the price, just not now.
Right.
So eventually there's going to be a supply crunch. And eventually Bitcoin's price will respond to that in the exchanges, but just not now. So that's what I think. I think that's going to be a big driver in getting us to 100,000 too. And I think that rumors of this happening is a big movement that's going to project that price out to past 100,000.
Yeah, I mean, when you think about supply and demand, it's got to break soon because there's so much money coming into the markets. Now, last week, a few days ago, there was some money moving out. Grayscale saw, I think, $40 million of outflows, which is very small considering how much has been put into these ETFs in recent months. So that's something that doesn't scare me at all. But the way to look at it for everyone listening is the supply and demand issue is going to catch up and the price movement is going to explode once we get to that tipping point. And that's just important for everyone to understand long term because, like you said, we can't just keep buying when there's only 900 Bitcoin being mined a day. And so this is very important for people to understand because it does put upward pressure on prices, especially if this buying behavior continues throughout the ETF. And it really illustrates a growing preference among big players to accumulate Bitcoin in large chunks. And this bypasses traditional exchanges and really minimizes market impact to allow them to buy more and more without having to pay more for them. And that's also why we've seen so much manipulation over the past 6 months as well from some of the big names, you know who you are out there, trying to get the prices down so you can get your hands on more. So I think that's just an important part of the overall grand, picture of where the markets are going for cryptocurrency. And
there's like a secondary purpose for this too, is that if you knew, for example, and I'm not saying Microsoft's doing it, but let's say, for example, you knew that Microsoft bought 25,000 Bitcoin yesterday. It would drop the price up. And let's say they had to buy another 25 next week. They don't want to cause a lot of attention either. So the OTC provides a perfect way for them to go over the counter, outside of the exchanges, and buy these Bitcoins over a certain time period without drawing a lot of attention. And then they'll come out later and say, oh, yeah, Microsoft owns 50,000 Bitcoin, or whatever it is.
Right.
So I think that this eventually has to push the price of Bitcoin up as the volume that is being purchased is going to outpace the supply. Eventually, we're going to see it reflect in the price.
I want to thank each and every one of you for listening and following along every week. Always remember, if you like the information and find value, please share it with a friend. Give us that 5-star review, and always make sure to follow along on Instagram at Crypto Trends Podcast, on Spotify, and on Apple and YouTube. We'll see you next week, and thank you all for joining.